Hey, what's up, guys? It's Justin here with Confident Options. Today we're reviewing trades closed on Tuesday, August 7th, 2018. Today we had 4 closing trades, 2 of which were earnings trades, which we'll go through first. The first earnings trade was in THC. We ended up selling the strangle, the 43.34 strangle around the market right into the close, and it ended up being a nice winner for us. We captured about 60% of the premium overnight. So let's take a look at the chart real quick, go through some of the logic. So here's the close before earnings. Here's the open after earnings. You can see it moved about $1, $1.30, $1.50, something like that. The expected move was over $3. I think it was $3.50. So perfect, right within our range, exactly what we expected. So we closed both sides of the trade in the morning, right as the market opened. So again, we sold the 43 call up here on the top end, and then 34 put on the bottom side. So again, call up top, put down below, and we collected about $1.07 for it. Since the stock opened well within the range, we were able to close out both sides, and we only had to spend 40 cents to close out both sides. So that represents a capture of about 62%. And then based on the premium required for the trade, we returned about 4.6% on the capital that we put to work. So an example of just a one contract position on this would be a $67 profit, and it would have only cost about $1,300 to put the trade on. So a nice earnings trade for us. Great way to start the week with these earnings trades. The next was MOS. Again, this was pricing pretty high. I think it was pricing at around the 1.5 standard deviated move. So it is a target for us for sure. All these don't work out. It doesn't work out 100% of the time. We just put the edge in our favor, and we take the profits when we get them. And then on stocks like this, where it kind of moves, but we don't get as much crush as we would like to, we still get out. In this case, it happened to be just about a wash. I mean, we made $8 on a single contract. So it's better than a loss, and we'll take it any day. So let's look over at the MOS chart here, MOS. So what we did was sell. Let's center this up a bit. Here's our close. What we ended up doing was selling the 32 call up here and the 28.50 put. So down here, nice and balanced again, right between, right beyond the expected move of the stock. It ended up moving actually within its range. It just made a move really quick at the open, all the way up to like 31.50, 31.70, and so that kind of pushed our call side out quite a bit. Of course, the put side was worthless. We were still able to get out of it for like 2 cents, so that was okay, just to take the risk off the table. But we weren't able to get as much crush as we had liked, just because of the quick move in the morning. And of course, we always get out as quickly as we can. That's just kind of how we deal with these, no matter what. So looking at the trade recap here, we sold it for about 35 cents. Not a great credit. Wasn't excited about that, but we know that since the move was being priced over the standard, the 1.5 standard deviated move, that the odds are still in our favor. So we went ahead and went with it. We bought it back for 27 cents, so it still represented a bit of premium capture, about 25%, and then a small return on capital. So again, a wash for the most part, but we'll take that any day of the week. The next 2 trades represent pretty good case study stocks or positions to look into. The first being EWZ. This is the Brazil ETF. If you guys remember, it had been getting crushed, slow down grind for months and months, and now it's kind of slowly upgrinding. And so we have some cyclicality in the markets, which is fantastic. But this is a good case study because it shows the power of adjustments, and it breaks the zero-sum game. I get a lot of questions about, well, if I trade 70% and I only make X number of dollars and I lose a lot more on the 30% of trades I lose, isn't it a zero-sum game if everything is efficiently priced? And this is the answer to that. The edge is with the fact that implied volatility is always overstated in the market in the long run, and that we have the ability to defend and adjust trades. So this is a really cool case study. So we entered this trade on 7/16, made a couple adjustments through mid-cycle, and then closed it out today for a wash. I think we just about paid for the commissions that we had. So all in all, it was good. Turned it from a loser into a winner, which is always a win in my book. So let's check out the charts on this one. All right, so we entered the trade here on 7/16. So that is, let's find that date. that's this candle here. So you can see it had this huge rundown, kept getting grinding lower and lower, and then it started grinding back the other way. So kind of like a big V pattern here. But we entered in here. Implied volatility was relatively high, so that was also a positive for this position. And what we ended up doing was selling the 3750 calls and the 3050 puts. So 3750 calls are going to be somewhere up in here, and then the 3050 puts are going to be somewhere closer to the 30 line here. And again, this was our entry date. So nice and balanced. We gave it some room to the upside, to the downside. The stock ended up going pretty strong here, gapping up a couple of days in a row. Of course, it's a Brazil ETF, and so you always get some sort of gapping just because their markets are open in different hours of the day. So anyway, it moved up. It moved past one standard deviated move. It tested our call side. So again, this is our call side. This is our put side. And so what we ended up doing on 7/24, so like 8 days after we opened the position, we rolled the 30/50 puts up to 32/50. So we took these puts here, we closed them out, and we rolled them up to somewhere up in here. So we're in the 32.50, and we collected a 20-cent credit to do that. So that again pushed us out, break even out 20 cents on the upside. So that occurred on 7/24, and so that you're right around here. And so we were getting challenged to this call side, so we did that. We got challenged big time again, and so we adjusted again. We took the 32.50s to the 33.50s. And again, we're just kind of slowly laddering this thing up. We collected another 12 cents of premium, again pushing us out another 12 cents on this side. So we always move up the untested side. That way we can push out the tested side, and we only do this if we can collect a credit. So we're getting paid to basically take in more credit and push out the break-even points on the tested side. So as it kept going, made a big jump up, continued to push, we adjusted again. So we adjusted here, and then we were opportunistic today on this big down move or bigger down move in the stock. Again, it's a $38 stock, and it moved a couple bucks, or it moved $1 today, which is, decent move for a $30 stock. So we took advantage of that. We closed out the position for exactly 1 penny greater than the credit that we took in. So looking at the summary for this guy, pretty interesting case. So again, we sold the 37.50 calls, 30.50 puts to open the position for 79 cents. We then bought back the 30.50s and sold the 32.50. So these are now gone. These cancel out, and we got the 32.50s, and we collected another 20 cents. So now we're at 99 cents, almost $1 for the trade. We got tested again, so we closed out the 32.50s, sold them, bought them back, and we sold out the 33.50s for another 12 cents. So now we're in $1.11 the entire trade, and we were able to close out then the 33.50s down here, and then the original 37.50 calls right there for $1.10. So basically break even. 1 penny greater, we captured a penny. So it's a scratch trade. We're able to get out what was a loss and now turned into a winner. I think probably a little more patience would have taken us home on this one, probably been a little bit of a winner if the market continues to pull back tomorrow. The thing is that we always want to be opportunistic when given the chance on a big move down to go ahead and take the position off for a scratch. We're also approaching, we're going to be approaching the 20-day mark the end of this week. So then we would be evaluating if it was profitable, we would be taking off the position. If it was a scratch, we'd be taking off the position. And if it was still not profitable or a loser, we'd be rolling it out to extend the duration on the trade. It was easiest just to defend it, finish it out today, close it out, and take the scratch, get our capital back out of the market, and then apply it somewhere else. So perfectly executed trade. We were very mechanical in when we made the adjustments. We always make the adjustments when the tested side doubles in delta, and so we always are trying to limit our delta exposure. We always want to try to have basically flat deltas or negative deltas, depending on your outlook of the market. So that was the first core portfolio position that we closed today, and the second being EWW, which is the Mexico ETF. So these are, I guess, pretty closely related, being Central South America ETFs, and some of the same stocks and same economical problems, geopolitical issues, and etc. So Pulling up EWW, you can see it also got crushed, and it's also starting to take a run back up. And so we sold on the 5th of July, the 53 call and 45 put. So let's find the 5th of July here to target our entry. 5th of July was this big move here. I think we entered towards the end of the day, I'll say. So probably somewhere up in here. So that was our trade entry. And then we traded the 53 calls, which is basically where it ended today. And we traded the 45 puts down below the market. So again, nice and balanced, gave it lots of room to play, to move higher, move back, move higher, do what it needed to do. On the 26th of July, on this kind of move up here, we got the signal that we needed to adjust the trade, and so that's what we did by moving the puts up. So we took these and we closed them out, closed out the 45s, moved them up to 49.50. So it was actually a pretty dramatic move that we made, just to be able to collect a lot more premium in the trade and keep pushing us out on this side, which is exactly what we wanted to do. Sometimes we step these up pretty slowly. This one didn't give us a lot of opportunity in between, and so we took what we had, what we were given, basically trying to reset the deltas, and this was looking like the 15 delta at the time of this move up here. So we went ahead and sold that and increased our credit. And so we closed out of the trade today by closing this, and we closed it for basically I'd consider it a wash. It is what it is. We're actually past our 20-day mark. We gave it a couple extra days, which actually hurt us here. So we should have been a little more mechanical and closed it out when it was sort of down in here. It would have been a little bit bigger winner. But it is what it is. So we moved on. We still made a little money on the trade, but nothing crazy. So going back to the trade summary, again, on the 5th, we opened the 53 calls and the 45 puts. We made that adjustment on the 26th by closing out the 45 puts and then reopening the 49 puts. Again, if you're trading one contract of everything, you would just close one, open one. If you're trading 5, close 5, open 5. It needs to always be the same number of contracts. So again, we close that out, open that up. So there's our new 53.49. Collected another 27 cents for a total of 95 cents. And we ended up closing out both sides today for 91 cents. So we collected 4 cents on the trade. If you would have traded one contract, $4, you know how it goes. So we'll consider it a scratch trade. It is what it is. We were able to defend it and keep moving on, pull the money out of the market, and then put it to work in something that has a little high IVR. Again, this hit our 20-day mark last Friday. We did not close it out when we should have. We let it go a couple extra days, and it bit us a little bit. It's always a good mechanical trade to keep things either rolled out or closed at the 21-day mark before expiration. We find that you have a lot bigger fluctuations in your portfolio. If you let these things go any closer than 20 days to expiration, you'll see a lot of large swings in P&L. Your Sharpe ratio gets a little out of whack. It turns out that you end up taking a little more risk than you're able to justify for the amount of reward that you're getting. And so that's why we always use that 20-day rule to roll out when we need to. We are relatively aggressive when it comes to adjusting these trades. You can see it never breached. Today was the first day it breached our call side, but we always look at the table when we're trading these things, and we look and see when the position. So in this case, we were selling the 24th of August. When we're selling these, we're always monitoring the untested side to see. Or the tested side, to see when it's delta doubles. And so if I was to enter this trade right here at the 14 delta and the 14 delta strangle, I would always be monitoring this very closely. So if the stock moved down, this becomes my tested side. I would want to move this side down. Once the trigger for me to move this side down is when this delta doubles, basically has doubled my risk in the trade. And so you can tell that 52 right now is about the 30, which is double the 14. And so you could tell that it would take 52, 51, 50, 50. So a $1.50 move would represent, to me, that it's time for me to adjust the trade. If it's $1.50 move the other way, we would be moving this up, closing it out, moving it down. It allows us to continue to collect premium, continue to stay active, and then it continues for us to limit our risk in these naked trades. So you always want to kind of stay on top of it. At least that's our philosophy. Stay on top of the management of the trade before it gets out of hand. If you guys have any questions, please let us know by dropping us a comment at the bottom of the closed trades tab. Again, you can see our past 30 days of trades on this page. It's under our performance and closed trades, or you can go to confidentoptions.com, closed-trades. Thanks a lot, guys. Have a great night. We'll talk to you later.